Yesterday there was a lot of talk about how mutual funds did not let investors redeem at yesterday's NAV. To talk about that issue and how mutual funds are reacting to this move up, Nilesh Shah of ICICI Prudential AMC and Dhirendra Kumar of Value Research Online join in. Nilesh, is it true that yesterday there was no redemption allowed at NAV, and what's the justification for that?
We have to be fair to the investors who are staying with us, investors who are redeeming, and investors who are coming in. Yesterday, when bulk of the market didn't really trade in, and 600 out of 800 scripts on National Stock Exchange were quoting at Friday's price because there was no volume, we could not have calculated a fair and appropriate NAV. In that circumstances, it would have been unfair to the investors who were redeeming out. It would be probably a bit advantageous to the investors who were getting in, and it will be unfair to the investors who were staying with us. So, on an overall picture, we requested MFI, our regulator, to say that if we can declare tomorrow as a non-working day, and they recommended that we should declare tomorrow as a non-working day for the benefit of all the unit holders.
Dhiren, acceptable logic for you?
Yeah, fairly logical and principled stand, because mutual funds buy stocks, and if you couldn't buy stocks or sell stocks, then how can you buy a mutual fund?
Nilesh, just one clarification. How does it work when the market hits down circuit, or do you think in those circumstances there were more hours of trade, so more stocks got to actually move up or down?
More importantly, the ups and down move, it's the calculation of NAV. If I had 800 scripts on National Stock Exchange traded and a price available, I would have calculated NAV, and then we would have taken a call whether we have the cash to pay for the redemptions or not. So, whole thing is that can we calculate NAV which is fair to the investor who is coming in, which is fair to the investor who is going out, and which is fair to the investor who is staying with us. If any of these three conditions are not met, then we have no option but to go back to the MFI or SEBI and request this to be declared as a non-working day on the overall benefit of the unit holders.
Did you get a lot of redemption requests, Nilesh, and have they come in since they could not be executed at yesterday's NAV? Would they be coming in today?
No, unfortunately, then most people were trying to take advantage of an arbitrage because some part of the NAV would have been quoted at Friday's price, and most people had the expectation that today also the markets will be up. So we had seen fair amount of buying interest at the client level and the distributor level than the redemption level. I think the perception of investors have changed, where selling at every rise has been now replaced with buying at every dip. So I don't foresee too much of redemptions coming through going forward if the market continues to remain supported by the policy actions of the government.
Dhiren, interestingly, we were speaking with the head of the UTI mutual fund who made the point that mutual funds have not seen that much by way of inflows over the past few months. I mean, do you expect to see redemptions to start kicking in, because these are probably investors who've held on for more than the past 6 months to 8 months, or got in even?
Yeah, certainly. I feel that there are a lot of disappointed investors today, more so because a lot of investors came at the peak level. And after that, they have been extremely disappointed by the secular decline over a prolonged period. And the psychology of an individual investor is that they are able to recover a substantial part of their losses, or they get in black and they plan to move out. So I think not in the immediate future, but as many of those investors will be breaking even on many of those NAVs, I think investors will be thinking about it. But looking at performance objectively, mutual funds were behaving like the ordinary investor, because many of them were caught on the wrong foot. First, they had substantial amount of cash, the market turned around, and they had those cash positions, and suddenly this surprising mandate which has put market on fire, and so mutual funds contributed to the whole thing, the whole thinking turnaround we have seen in the past couple of days. Was the extreme surprise, and most mutual funds also turned optimistic, and they were sitting on substantial amount of cash.
Is that a fair point, Nilesh, that many of the mutual funds, equity mutual funds, may have actually underperformed the market on the way up because of large cash holdings?
I think we need to see the picture in whole totality. I can talk about ICICI Prudential Mutual Fund, and as Dhirendra will agree, we have never taken aggressive cash call across most of our funds where the mandate is to invest in equity. On the way up, probably we would have underperformed in some of our funds the broad market because a lot of high beta stocks moved up significantly. Stocks which were beaten down in real estate, stocks which were beaten down in constructions and power, they have jumped up significantly. Some of those stocks are today trading above fair value. I would not like to be accused by participating in those stocks later on that you don't look at the quality of these stocks. Anyway, a 15-day period or 30-day period is unfair to evaluate a fund manager's performance. Let's talk about 3 years, 5 years and 10 years performance, and on that basis, most of the Indian fund managers have been outperforming benchmark indices by a reasonable margin. How many analysts were there who were predicting election results that there will be a thumping majority and the elections outcome will be like this? Fund managers are not gods, they are also human beings like you and Dhirendra. They also take a call based on the rational expectation. On Friday, no one had predicted that on Monday there will be a working government where there will be so much of hope and aspirations. We built little bit of cash balance to ensure that if there is an election outcome which will be against our expectations, we'll be able to average ourselves in. And on the back of a rally where the markets had moved from 8,000 to 12,000, it was not a very inappropriate call. So in the hindsight, anyone can say this should be done, that should be done. But at the end of the day, have we followed a logical, rational approach or not? And I think our 5-year and 10-year performance does show that we have been following a fairly reasonable and logical approach.
Dhirendra, this criticism though is not just about Monday's event, right? This criticism about high cash levels has been happening since the market bounced almost 50% from its lows. I mean, just give us a sense, even ballpark, of how much money is waiting to be invested from the mutual fund fraternity in the market. What would you estimate the cash in toto at?
No, it is not. It is not a matter of estimation. It is a matter of fact that last month end, April end, mutual funds had nearly 14,000 crore. And it was equal to what they had in March end as well, which means on a net basis, all equity funds combined together had similar amount of cash, while the market has gone up. I agree that ICICI Prudential may not. It is not a strategic way they manage it, and they had, given their size, they had about 6.5% of cash position, which I think for an open-end equity fund is quite normal. But on the other hand, some of the large fund families, for their with substantial equity assets under management, for example, Reliance Mutual Fund itself had about 5,900 crore cash as on month end, as disclosed by them, which accounts for nearly 27% of their equity funds. The number 2 was UTI Mutual Fund. They had about 1,700 crore, which amounted to about 18% of their total assets, followed by SBI. In fact, in SBI, the surprising thing was that compared to March end, their April end cash actually went up substantially.
Dhirendra, how would you advise mutual fund investors, equity mutual fund investors, to approach investing now? Because there has been a disruptive event in the market. Suddenly, the market is up 25% and people may be a bit lost on how to position their investments. What would you tell them?
I would urge investors that they should not rush into the market. They should, if they don't have a plan, they should have a plan. They should develop a plan and go about participating. It is also about time that indexing. So far, we have held this view that index is not relevant, and so far. Till about 6 months back, we held this view that equity funds beat actively managed funds beat Sensex handsomely over a period of time. I think with things have changed, things are changing dramatically. I think it's about time when investors should start looking at indexing as well as part of their core portfolio.
Nilesh, just one question on the market as well. I mean, we had a crazy day yesterday. We've also had a fantastic mandate in terms of elections. How would you map the next few weeks and months for us?
I think we are going to see more crazy days, obviously not like yesterday going forward. Market today is driven by hope and aspirations that, like 1991, when the same government came and on the basis of the majority given to them, they pulled India's growth trajectory and in a challenging environment did a wonderful work. Today the same aspirations are there. The environment is as challenging as it was in 1991. Probably we have more foreign exchange reserve than 1991, but the deficit is fairly high. And there is hope that the government will carry out various reform process whereby it will pull up the growth trajectory of India. And like China, traveled on the prosperity path from 80 till today, India will probably be moving in the same direction, and hence a multi-year bull run can be kind of resulted into. So there is a lot of hope and aspirations. It's impossible for government to meet all the hope and aspirations at one go. So there will be days of disappointment, there will be days of hope, and we'll continue to see a market which is swinging up and down based on hope and greed or hope and fear. But overall, there is reasonable chance this time that we should be able to kind of lead economy into higher growth trajectory, and this should result into stronger capital markets over years to come.
Thanks both of you for joining in today. That's the mutual fund perspective. Meanwhile,